Those are going to be key factors for us as we go into the new year. We're going to be going into the new year with revenue and revenue and revenue and revenue. That's the focus. Hopefully, that revenue will be rewarded with the shareholders holding our stock and becoming longs versus shorting our stock. Everybody has a right to short. It's okay to do that when you bet against somebody. And I like that because it gives me motivation. When you bet against me, you make me work even harder. I want them to be rest assured that I am working as hard as I possibly can to create shareholder value for them, to get out there and do the right thing and to create as much positive momentum.
It's a new year and new opportunities for Mullen Automotive, but the road ahead seems challenging. In the fiscal year ending September 30th, 2023, Mullen reported a staggering net loss of $1 billion, signaling a significant hurdle in its financial journey. As we look into the real data and statistics behind this substantial setback, we'll explore the question on every investor's mind. Can Mullen Automotive pivot and achieve profitability in 2024, and will this be the year Mullen makes a comeback? The last fiscal year brought forth a financial roller coaster for Mullen Automotive. The revenue for the year tallied in at $366,000, but the cost of goods sold was $273,882, leaving a gross margin of $92,118, approximately 25%. However, the alarming revelation comes with a staggering net loss of $1 billion, showcasing a drastic increase from the previous year's $740.32 million. This translates to a net loss per share of $1,574.14, a significant leap from $63,085.26 a year ago. Moreover, non-cash expenses emerge as a major player. Among these, stock-based compensation hits the charts at $85.44 million. The impact of derivative liabilities further amplifies the scenario, contributing to the substantial net loss. But did you know that Mullen Automotive has been grappling with formidable challenges in the electric vehicle market? The numbers show a staggering 99% decline in MULN stock value since 2023. This steep descent is not merely a result of chance. Instead, it manifests adverse market conditions coupled with a notable drop in the company's stock value. The market challenges faced by Mullen Automotive stem from unfavorable conditions that have plagued the EV sector. The decline in stock value, which plays a pivotal role in the company's financial standing, is a direct consequence of these adverse market conditions. The implications extend beyond mere numbers since they cast a shadow over Mullen's operational capabilities and financial health. Now, looking at Mullen's $1 billion net loss, a substantial portion, precisely $820.4 million, is attributed to non-cash expenses. Unraveling this complex web reveals a breakdown of components that significantly impacted the company's fiscal health. Breaking down these non-cash expenses, we encounter stock-based compensation, making up a considerable $85.44 million. This compensation mechanism involves granting shares to insiders, which introduces financial intricacy and dilutes shareholder value. In particular, CEO David Michieri's stock awards amounting to $48.87 million contribute to this segment, further influencing the company's financial landscape. Another significant player in the non-cash expense realm is the $63.98 million goodwill impairment related to Bollinger, a subsidiary of Mullen. This impairment is attributed to the decline in MULN stock and, as stated by Michieri, unfavorable capital market conditions. Derivative liabilities further complicate the financial equation, adding $629.30 million to Mullen's non-cash expenses. These liabilities are intricately tied to dilutive agreements with lenders and prior agreements. Moving on to Mullen Automotive's operational performance, the spotlight falls on the noteworthy increase in the loss from operations, reaching $377.77 million. Breaking down the components, a significant portion of this increase can be attributed to general and administrative expenses, totaling $215.84 million. This includes various administrative costs, salaries, and other overheads contributing to the financial strain. Furthermore, research and development expenses have notably impacted, contributing $77.38 million to the augmented loss from operations. While innovation and development are crucial for an automotive company, the financial burden incurred in this domain is evident in Mullen's operational performance. Adding to the complexity, impairments to plant, property, equipment, and other non-current assets further compound the operational challenges. A total impairment of $14.77 million reflects the adverse impact on Mullen's long-term assets. And now, let's look at Mullen Automotive's performance in terms of vehicle deliveries, a crucial aspect of its operational activity. For the year ending September 30th and the quarter ending December 31st, Mullen made notable strides in this domain. However, the intricacies lie in the discrepancy between invoiced amounts and recognized revenue. In the fiscal year ending September 30th, Mullen delivered 25 campus urban delivery vehicles and 10 threes. In addition, invoicing amounted to $1.01 million, but the recognized revenue was $366,000, revealing a substantial gap. This discrepancy stems from the company's adherence to 30-day payment terms. The impact of these 30-day payment terms on revenue recognition is pivotal. Despite delivering vehicles and invoicing customers, the revenue is only recognized once the payment is received, creating a delay in acknowledging the full financial impact of the deliveries. This practice introduces a level of financial intricacy where the actual revenue doesn't align with the invoiced amounts until the payment terms are fulfilled. But before we continue, we really want to thank you for watching this far. So, is Mullen poised to overcome its challenges through strategic moves? One notable initiative is the company's proactive approach in seeking a Department of Energy grant for battery materials, signaling a forward-thinking stance. In a bid to strengthen its position in the electric vehicle market, Mullen Automotive has submitted a concept paper for the U.S. Department of Energy's Funding Opportunity for Battery Materials program. The company is eyeing a grant of $50 million to invest in battery equipment at its high-energy facility in Fullerton, California. This grant application reflects Mullen's commitment to supporting domestic battery manufacturing, aligning with broader industry trends, and enhancing the company's competitiveness. The focus on battery materials is strategic, as Mullen envisions a potential reduction of up to 20% in current battery costs, a crucial factor in the electric vehicle market. By actively seeking funding for battery materials, Mullen demonstrates a dual focus on innovation and cost efficiency. If secured, the $50 million grant would enable the company to invest in cutting-edge battery equipment, paving the way for advancements in battery technology. This positions Mullen as a contender in the rapidly evolving EV market and underscores its dedication to staying at the forefront of technological developments. Moreover, Mullen's move to support domestic battery manufacturing resonates with broader industry trends emphasizing sustainability and reduced reliance on external sources. Additionally, the potential acquisition of a logistics company, as indicated by Mullen Group's letter of intent to buy Container World Forwarding Services Incorporated, adds another layer to the company's strategic moves. This move could enhance Mullen's logistics and warehousing segment, potentially streamlining its supply chain and improving overall operational efficiency. And let's not forget the buzz surrounding Mullen Automotive's presence at CES 2024. At CES, Mullen unveiled its game-changer, the Mullen 5 RS crossover. Introducing the Mullen 5 RS, the company's bold venture into the passenger electric vehicle market showcases its commitment to diversification and innovation. With top speeds exceeding 200 miles per hour, acceleration from 0 to 60 miles per hour in less than 2 seconds, and boasting over 1,000 horsepower, the significance of this foray into the passenger EV market extends beyond the flashy features of the Mullen 5 RS. CES serves as a platform for Mullen to shape its public image and influence investor sentiment. The exposure garnered at this premier tech event positions Mullen as a serious contender, projecting an image of resilience and innovation in the competitive EV market. The recent surge in MULN stock performance also adds an intriguing layer to the narrative. Despite the challenges faced, the stock witnessed a noteworthy uptick, catching the attention of investors. A key factor contributing to this resurgence is the reverse stock split conducted by Mullen in December, which has sparked renewed interest among traders. However, market skepticism looms regarding the potential need for additional equity funding. While the reverse stock split has generated positive momentum, questions arise about whether Mullen will require further capital injections to execute its strategic plans. Resistance at $18 poses a notable challenge, where previous rallies faced hindrances. On the flip side, support at $8 offers a stabilizing factor. These levels become crucial indicators for investors, influencing decisions and shaping expectations for the stock's future trajectory. So, do you think Mullen can sustain its momentum and emerge as a true powerhouse in the electric vehicle market in 2024? Share your perspective in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know about NIO, which is also a rising EV company. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.